Shares of Peloton are still down about 97% from their pandemic peak, but what you might not realize is that this is a very different company today than it was 3 or 4 years ago. When Peloton came to market and became a really popular stock, the company made a vast majority of its money selling bikes. It made a very good margin on those bikes, and then it added on a services business that seemed to be a really nice and steady growing business as the number of bikes increased. But the company got in trouble when it built too many bikes, had too much inventory, had to discount those products, and suddenly its cost structure got out of whack. So a number of strategic changes that Peloton has made over the last couple of years really change who this company is now and how investors should think about it. And one of the things I think we often fall into is when a stock is down, you think of the company that it was when the stock price was higher and might not realize that this company today is very different. The opportunity and the risk today is very different than it was a couple of years ago. This is no longer the company that it was during the pandemic. This is now a recovery play in fitness as a service. And if that is a big business to be had, Peloton is going to be one of the winners. It is going to be a great investment to hold long term. It's probably going to be volatile along the way, but I want to show exactly what we want to be looking at as investors going forward. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go back a couple of years and look at where Peloton generated its revenue and profits during the pandemic, because I think this tells an interesting story when you start to look at it compared to what the business is today. Here's a look at the fiscal 2021 results for Peloton. Peloton is on a 6-month offset for its fiscal year. So this is the quarter ended June 30th, 2021, kind of the heart of the pandemic when the company's growth was at its peak. It seemed like Peloton could do no wrong. And I'm going to focus mostly on these fiscal year numbers, so the full year numbers. $3.15 billion in connected fitness product revenue. That's actually hardware revenue from particularly selling bikes, especially in these days. So just a massive business growing over 100% year over year, and really dwarfed the subscription business, which was less than $900 million, less than $300 million on a quarterly basis. And on top of that, this was a very profitable business, around 30-35% gross margin. So Peloton was selling a lot of bikes and was selling them at a very high margin, but they still weren't profitable. So that was where the company was. It was a massive growth company. But when you're not making money selling hardware, because you have all these operating costs, sales, general, administrative, and then R&D, your cost structure is just kind of out of whack. And that is what happened to Peloton when hardware sales started to decline. Suddenly the business deteriorated really quickly. But what does the business look like today? It's very different than it was back in 2021. These tables look a little bit different, but it's the same information. And in the middle column on the right here is Q2 fiscal year 2024. That is the most recent quarter, ended at the end of December of 2023. And look at the flip in revenue. Peloton now is generating $424.5 million in subscription revenue and just $319 million in hardware revenue. So this subscription number gone from $281.6 million to $424.5, a massive increase in the revenue that is going to be an ongoing revenue source and is going to generate a margin in excess of 70%. This is exactly what you want to see as a fitness as a service business. You want Peloton to be able to grow this subscription revenue, and if they can do that, do it at a very high margin, keep their operating costs, or even decrease their operating costs. This is the total operating expense line. You can see that over the past year, operating costs down 14%. So that's a huge change in operating costs. High margin revenue going up, maybe not at the rate that we want to see, but it is on the increase, and costs going down. So here's the number that you want to keep an eye on with Peloton in the future, because this is ultimately going to determine whether the company is able to perform a turnaround or not. Ending paid app subscriptions. I'm going to get into exactly what this app is in just a minute. But a year ago, there was 852,000 app subscribers, and now there's 718,000. So a decline of 16% year over year, and churn is way too high. You want this churn number to be more like 2% ideally, but maybe 3, 4, even 5%. But there are some changes that Peloton made to the app the pricing, the model, the way that it's distributing it to customers. And that's what I think is kind of muddying the waters right now. So we'll see how this plays out, but you want to see this number growing over time because this is the people who don't necessarily have a bike or a treadmill or a rowing machine. They're just subscribing to the app. So it increases your potential user base and adds very, very high margin at the same time. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So this is the Peloton home screen, and this is going to give you all the information about the company. A lot of this hardware is very similar to what it was a couple of years ago. The bike and the original treadmill haven't really changed. They've added some higher end products and a rowing machine. But what has changed is the number of classes and then the app that they have. So they talk about this, thousands of classes on the Peloton app. And if you are a subscriber to Peloton like I am, you have seen a massive increase in not only the number, but the focus of the classes in that Peloton subscription. It used to be when I signed up for Peloton, most of the classes that they had were related to the bike, and 80 or 90% of the workouts were related to the bike. Now, I think that's changed in a dramatic way. We'll go through just a few of these, but you got walking, Pilates, strength, cycling, yoga, running, boxing, rowing, meditation, bar, stretching, over a dozen different modalities, as they call them, that Peloton is offering to customers. And what this does is it gives you a different kind of workout depending on what you want to do that day. So instead of a subscription to the Peloton app just being about bike workouts, now it's just about working out in general. So maybe on a Monday you want to do a run, Tuesday you want to do some strength work, Wednesday you want to get on the bike. Peloton has something for everybody. And what the app does is it actually allows you to work out anywhere, anytime, even in the gym. And I think this is the little video here that they have of that. But that's where I think things really change with Peloton. Instead of hiring a personal trainer, you can just have one in your ears when you're out for a run or when you're in the gym working out, doing some strength workout. This was kind of an aha moment for me. I went for a run with the Peloton app and I was like, I usually listen to music or a podcast, but maybe I'll try this out. And it was great having somebody in your ears, encouraging you to focus on form, telling you when to turn around and out and back. I thought it was very useful, maybe not something I would use for every run or every bike ride, but well worth this price point. Monthly fee, $12.99 a month for the Peloton One app, has a number of different workouts, and then the full app access is $24 a month. So think about that compared to a traditional gym membership, which can be well in excess of $100 a month. Higher end gym is going to be more like $200 a month. You get a lot of that content through this app. So this is the way that we need to think about Peloton today, is as a services company that is providing an abundance of content for a relatively low price, just like a lot of streaming TV providers. So Peloton isn't yet a profitable company. It definitely hasn't pulled off this turnaround, but the company that you're investing in today is not the same company that you were investing in 2020 or 2021. That was a company that was selling a lot of hardware and trying to tack on these subscriptions, but both of those things were very high margin. Now, Peloton is basically trying to break even on all of its hardware and expand the number of subscribers that it has. You no longer have to have a piece of Peloton equipment to be a subscriber to Peloton. You can just subscribe to the app. So that potentially expands the market that Peloton is addressing, and I think that's ultimately where the opportunity is. Now, the question is, are they going to be able to go from 700,000 or 800,000 app subscribers to 3, 4, 5 million app subscribers? If they can, this will be a phenomenal investment. But if there's no market for that kind of app, then it won't be, because this is a company that does still have about $1.7 billion in debt on the balance sheet. So there's a lot of risk there, but I think the risk-reward balance is what I'm really attracted to. There's a lot of upside potential, given the fact that a lot of the streaming competitors have already fallen by the wayside. So what do you think about Peloton today and its new business model? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.